Forvis Mazars, Linch, and ACG's Bob Dunn appeared on a panel at this year's DealMAX, giving a state of the market update for 2026 and beyond. Scott and Bob are here to share the biggest takeaways and offer a preliminary look at GF Data's Q1 numbers. Plus, Forvis Mazars Fred Dearden is here to offer a European perspective on the market. Welcome, everybody.
Thanks for having me.
Scott, we're going to start with you. Can you give us a few high-level takeaways from the discussion at DealMAX that you had?
Yeah, we had a really interesting discussion. It started with some macro trends of what's going on in the U.S. economy, things around the war, around inflation, tariffs, and how that was impacting the overall economy. But also, we took that down with some GF data information to understand what was happening in the middle market. We had a couple middle market private equity funds represented on the panel to give their perspective. Really interesting to hear their perspective because basically they said, hey, like you got to go invest in good companies. You have to kind of ignore some of the noise that's out there. And I think that's what we're seeing with our clients and people that we're working with in deals right now is that we're trying to get deals done even though there is noise out there with what's going on. But we've definitely seen an uptick in deals in the last quarter.
Yeah, I would add, 2025 didn't materialize for the middle market like we were expecting. Deal volume dropped pretty significantly for a lot of the challenges that Scott just listed there. But I think, the sentiment is right. You really need to just stick to your knitting, get out there. The environment's going to change no matter what, but the good firms are going to go out and do deals, whether it's a tougher environment or a better environment for it.
Mm-hmm. So I think we saw this kind of K-shaped dynamic in Q1 for M&A on a global scale. I do want to talk about the North American market and maybe some of the initial numbers coming out of GF Data. So Bob, can you kick us off?
Yeah, so it's preliminary numbers now. In terms of deal volume, which again was a challenge last year, we're probably going to end up around the same place we were for Q4, right around 80, 85 transactions tracked. Not as good as you would hope for Q1, but a 23% improvement over where we were for Q1 2025, so that's positive. I think the main takeaway on it, though, is valuations were actually up by half a turn in Q1, and that broke a cycle that we saw all through 2025 with this alternation where deal volume would go up, but then the deal multiples would go down at the same time, and vice versa in subsequent quarters. So now we're actually seeing an increase or steady state in volume, but an increase in valuation. I think that bodes well for the coming quarters.
Mm-hmm. Scott, any reaction to that?
I mean, we're seeing the same thing. I think that the deal flow started to pick up a little bit in the fourth quarter and kind of seeing that trickle into the first quarter. I mean, first quarter is always a little bit slower because people are often waiting on the year-end numbers to come in before they'll actually transact. So you kind of see the deals towards the end of the first quarter when you see it pick up. And in the second quarter, we're expecting to be pretty strong. So
I'd also add, too, we saw some improvement in financial performance, particularly with trailing 12-month revenue, which was a challenge in 2025, but it seems like that's picking up a bit now. So performance has definitely improved, and I think that's impacting valuations also.
Great. All right. Fred, let's turn to you. You're here all the way from London, so we want to get the perspective on the European market. What did you see in Q1?
It's interesting, very similar themes actually. I think, the kinds of economic challenges that have been spoken about, they're very similar for us in the UK. The reality is as well, deal volumes have been relatively low, probably for a 2-year period, I would think, across the UK and Europe. That cycle will need to change at some point. I think there's more capital in the market in the UK than there has ever been, and that's not just due to inflation, that's due to a lot of new capital raises and people who've got money to deploy. So we've seen volumes already increase. I think if you look at similar data sets in the UK, actually Q4 was a lot better than they expected at the end of last year. That's really built into this year. So we're seeing positive signs. I think deals just take a little bit longer to get done in the current environment.
Mm-hmm. That makes sense. And deal makers are nothing if not optimistic, as you have shared with us so many times. But everybody kind of wants to know, even as sentiment continues to stay positive and resilient, what's going to have to happen in order for deal making to really kick off for the rest of 2026 and into 2027? And I want to ask all of you, but Bob and Scott, let's start with you guys from the North American perspective.
Yeah, I'd say, we got to get money back to the LPs. That's what we've been talking about a while. And here we are at DealMAX, and you're talking to a bunch of different sponsors about what's going on. And the sentiment is we're either looking to sell something, or we have just sold a business, or we're getting ready to sell this one of our platform deals. And that's how they get the money back to the LPs. Continuation funds can only take them so far. They have to get the money back to their LPs. One of our panelists actually had some interesting to say. It said, right now, some funds are waiting to invest into that last deal where they invest 75% of their capital, because then they have to start fundraising again. And if they haven't gotten the money back to their LPs, they're not going to be fundraising. So that really has to happen.
Yeah, those conversations are no fun with the LPs when you know realizations. And I agree completely with Scott on it. And I think the other side of it too is you see more private equity exit activity, which I think we are seeing right now, picked up at the second half of 2025, continuing now. It makes the overall M&A, middle market M&A environment a lot more palatable for family-owned and individually owned businesses, which is what really is the majority of what's kind of going into the deal volume for private equity. So, you know, if you start seeing good exits from private equity, it just makes it look a lot more appealing for those folks considering selling their businesses. And with what we've seen in the last 5-year period, it's been one thing after another. I think there's a large amount of family-owned businesses sitting on the sideline that have a limited amount of time to exit just because of people getting older, right? So I think you start to see more private equity exits. You're going to start to see more individuals and families exiting, and I think that will really add some buoyancy to the market.
The so-called silver tsunami.
Silver tsunami.
Silver
it is
tsunami.
coming.
It's
I promise
coming.
you that. Yeah.
Fred, what's your perspective from Europe?
Very similar, actually. I mean, there's been a lot fewer private equity exits in the last 2-year period. I mean, if you look at the data, the volumes have been down, but that's mainly because PE haven't really been selling. Given the way that money is structured and needing to return it to LPs, that will need to break at some point. So, we're expecting to see a lot more exit activity in the next 12 months. And again, similar with founders, families, that we work with, it's an exit route that I think we'll start to see for them as well in the coming 12 months. So.
Great. All right. Well, Fred, Bob, Scott, thank you so much for joining us. It's been a pleasure.
Yeah, thank you.
Thank you.